Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Tuesday, February 20th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's jump into the charts. Just a reminder that we've got this descending channel top that comes off of the July high of last year that's performed pretty well over the last month and a half, 2 months in containing selling pressures, and I expect it to continue to do so if tested. The question is, if tested, 175.81 is the beginning of it's part of a range in the mid 170s that can absorb selling through March and even perhaps into later year. 175.81 would be expected if we were to close today below 181.50. This is the daily chart now. That same channel top that I showed on the weekly chart, you can't see the beginning of it because we've kind of zoomed in here, is at 175.29 on the daily chart, 175.81 on the weekly chart. We also have a descending channel bottom at 176.44 that is part of the more recent highs. This entire area loaded with solid support, able to contain selling through March, possibly into later year, and from here we can turn back up actually to new highs, or at least into the mid 190s within a month or two of doing so, which would be our next meaningful buy signal on strength. And I take you to this chart here. This, if settled above 197.49, does pivot the market aggressively north as we move into the later second quarter. But for right now, you could say that you're bottom picking the mid 170s and you're selling the mid 190s. These levels all changing on a daily basis, and we update you here with those exact levels on a day-by-day basis, of course. So let's get back to the day itself. 181.50. We're just above it, able to contain weekly selling pressures, and above which the 190.55 descending two-thirds speed line remains a 1 to 2 week target. In this 197.49 extreme channel top, a 3 to 5 week objective. And that really is the way I see it. Unless we close below 181.50 today, that does pivot the market south through the rest of the week. And we could, under that scenario, by Friday's close, actually slip into the significant mid 170s, 175.29, 175.81, and once again, a descending channel bottom at 176.44. 3 to 5 day sell signal. You could call it a 1 to 2 week sell signal, but a 3 to 5 day sell signal anyway, with a settlement today below 181.50. Expecting the mid 170s, where a buy opportunity would present not only for the week, but really through the second quarter. But I don't expect to see the mid 170s unless we close today below 181.50. If we break 181.50 or open below 181.50, 179 and a quarter is in reach. And if we close below 181.50, no good reason to be long Apple through the rest of the week, as I would then expect a test of the mid 170s. Until then, this is still bottom picking territory, not only on a daily basis, but even on a weekly basis, because above which 190.55 remains a 1 to 2 week target. And yes, I think you can buy 181.50 on a kind of a 3 to 5 week basis, because holding above it will keep the mid to upper 170s in reach over the next 3 to 5 weeks. Now, as I've said all along, it really is a settlement above the 190.55, a descending two-thirds speed line that clearly indicates 195.51 to 197.49 over the following week, two at the very most. Let's go with kind of the day itself. We do have 181.50, of course, as our support level for the day. And upside, we have this new over the last few days, 3/8 upside Fibonacci that has occurred over the last 2 weeks. It can contain intraday buying pressures. We almost tested it actually on Friday. And so it can contain intraday buying pressures. This is a solid day trade right here, buying 181.50, selling 185.06, and vice versa. Pushing through 185.06, 186.73 is likely today. And that is a newly formed descending two-thirds speed line that is based in part on Thursday's low against this preceding high from earlier in February. It can contain session strength. And if we were to close above 186.73, and I don't see that today, but we could certainly over the next few days, we've got a good low for the week, 190.55, then likely over the following 2 to 3 days, where we can place a weekly high and perhaps fall away from here. I mean, you can play this both sides. Not only waiting for the settlement above 190.55 to indicate the upper 190s, but you could sell 190.55 in anticipation, perhaps, for bearish rotation back into what is now in the lower 180s. That is a possibility. It's not what I would expect, but the market does not necessarily follow my expectations. So 190.55, and I'm mentioning this to those of you who trade the 3 to 5 day out to the 1 to 2 week time frame. 190.55 can be sold for that purpose. But if we close above 190.55, your 3 to 5 day, 1 to 2 week swing traders should actually reverse and go long in anticipation of this band of channel resistance between 195.51 and 197.49, where a weekly high can be placed, and quite possibly one through the month of March we could fall away. It would be a settlement above 197.49. I think that would resume the sort of a bullish tempo that we've seen play out quite a bit at various times over the last year or so. And I do think if we close above 197.49, that does pivot the market aggressively north as we move through the second quarter. There is still a case to be made, believe it or not, for 237.97 over the next year or sooner. And if we were to close above 197.49, I think that could be the signal 3 to 5 months later for reaching 237.97. Last thing I'm going to say is if we were to close this week below 175.81, and I think that is a long shot. First of all, we need to close below 181.50 to indicate as much. And then I think it could take, if not this week, it could spill into next week before testing it. But if we were over the coming weeks to close below that 175.81 formation at the end of a week, that is only about a 3 to 5 week sell signal into what is now the low to mid 160s. 162.88 to 164.33 is a solid zone of support that may well contain selling through the entire year, and above which this market has shifted into another paradigm of trade, in my opinion, following the buy signal last May above this structure. It held beautifully last fall. It can continue to do so. We could test this area repeatedly, and over time, I do think it still points to higher trade. I think that pretty much rounds it out. I'm going to leave you with this chart here. Actually, no, I'm going to leave you with this chart here. It's the most appropriate one for the day. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial. I'll be back tomorrow with Wednesday's Apple Report. You have a great day.